Hey, what's up everybody? Welcome in today's video. In today's video, we're going to go over the Fibonacci Extension tool. What is the Fibonacci Extension? How to use it, and how it can actually improve your trading performance. So, if that sounds interesting, please do stick with us until the end. Don't forget to subscribe, turn on that bell notification, and share with a few friends that you believe will find value in this video. So, let's get it. All right, now what's the Fibonacci extension? For those of you that are actually aware of the Fibonacci, most of the people out there actually only use the Fibonacci retracement tool, which is actually used to measure how far a wave is retracing to before it actually extends, right? So for instance, you see here we have an impulse bearish wave because it's creating lower lows. Now, once it starts pulling back, you use the Fibonacci retracement to measure how far the wave is going to retrace to before it actually continues going lower, right? And I actually talked about this in one of my videos, so I think I'll link it above here so that if you haven't watched it, you can watch it. It shows you how far the wave is going to retrace to before it continues extending, right? Now, the Fibonacci extension tool does the opposite. Why did I say this? It's crazy. Does the opposite of what the Fibonacci retracement does. It does measure how far the wave is going to extend to after it has already retraced. Hence the word Fibonacci extension tool. So it measures how far the wave is going to continue so that you can actually know where to place your targets and where to get out of the trade. So, for instance, let's use theoretical examples before you actually move into practical ones. So for instance, you had a wave here. And prices were going higher. Obviously, before you got this turnaround, you would have placed your Fibonacci retracement to see where the wave is going to retrace to. So the 0.5 did not act as well. You look at the second golden key level, which will be the 61.8. And voila, it has landed around somewhere there on the 61.8. So you'll actually take your trade once it touches the 0.618. Now, after you got your entry, where do you place your take profits? Where do you exit the trade? That's where the Fibonacci extension comes in play. The Fibonacci extension is like a tool where it actually uses 3 touch points. So you place it where the wave began, where the wave extended to, and where the wave retraced to. Now, you have to customize your Fibonacci extension to actually give you these 3 points, 0.618, 1, and 1.618. Because once you place it for the first time, it will have a lot of zones. Like it will have 0.5, it will have 0.718, it will have 1.14. You have to clear all them out and leave 0.618, 1, and 1.618. Now, after you place this, these will be your targets. Like they will show you where prices are going to extend to. So for instance, after placing the trade like this, after you get your entry here, your first targets will be on 0.618, which most likely all of the time always lands at about where the first turning point was, right? Where the wave extended to, which is the next resistance or market structure. So which it actually makes sense. So once prices reach here, first things first, you always need to already be at break even. And then you need to secure at least 50% of your trade. Second targets are always at 1. That is where you need to fully exit the trade. Reason being, most of the times, once prices extend to 1, they'll have already broken this structure and they'll have already created a very strong extension. So as we all know, prices don't move in a straight line. So after prices reach on 1, most often than not, they'll retrace to 0.618 before continuing its extension to 1.618. So that means at 1, you fully close the trade. And then after that, you take another buy on this market structure for prices to push you higher all the way until 1.618. So that's how you can actually utilize the Fibonacci extension to get better entries, better exits, and maximize your gains on the trade. So let's stop talking about the theoretical and let's get right into the practical. So we see here prices broke below this structure. Let's start using this example. We saw prices broke up below this structure, and then obviously after breaking this structure, this automatically turned into a downtrend. So prices are pushing lower. Let's try and put in the Fibonacci first retracement and see if it will respect. We see here this was the most recent high, this was the most recent low, so obviously we'll place it like that, and we can see it has respected the 0.618 Fibonacci key level. After that, it gave a confirmation and then just dropped it like it's hot. Drop it like it's hot, right? And then it kept extending to push lower. And then after that, if you want to know, for instance, you've taken your trade here, so you have placed your order, short trade, your stop loss being somewhere up here, or if you want to keep it aggressive somewhere there, you're like, okay, where do I place my targets? Your targets, you use the Fibonacci extension. Again, you place the first point where the wave began, second point, the farthest the wave has gone, and then the third touch where the retracement ended. So first targets, you see, as I told you, has to be here. So your first targets have to be here on 0.618. And as I told you recently, like in that theoretical example, you can see at 0.618, it's most likely the place where prices actually had that turning point. So it's a great place to place your target, your first targets. You can see it has given us a 1:3. And as I always tell you, always take a trade that's at least 1:3. So that will be your first target. Now, second targets will obviously be at 1 right here. And you can see targets were hit, targets were hit. It gave us a 1:5.46, right? And then after prices reach here, as I always tell you, fully close the trade. So once prices reach here, you are done, you have fully closed the trade. You are waiting for a re-entry somewhere here on this market structure. Right? On this market structure. So once prices retrace here, you can see prices after extending all the way down here, started retracing, reached somewhere up here. This should have been your entry. This should have been your second entry. And the reason for that, as I always tell you, is prices retrace to the structure where there's 0.618. Now, the Fibonacci tools, you need to understand one thing. They'll not always be picture perfect because this is obviously trading. So you'll need to look at the closest point in which the prices have retraced to. The closest point will obviously be this structure right here. So this is where you should have taken your second entry, and your targets should be aiming for prices to reach 1.618, somewhere down here. And obviously, as we can see, prices have still not yet hit that, but they're well on their way, because you can see, depending on the, and by the way the market is actually moving, it's creating lower lows. As we had a high, we had a low, we had a high, lower high, we had a lower low, we had a lower high. So most definitely, we understand that prices are most definitely having a high probability of keep on pushing lower until they actually hit our targets down there. So that's how you can actually use the Fibonacci extension tool, guys, to get better trades, better exits, and overall it will actually improve your general trading performance. So I just wanted to keep it short and brief today. So that's how you can actually use the Fibonacci extension tool to make yourself a better trader and capture better trades, have better and stronger exit points. So till next time, guys, I appreciate you all. If you found value in this video, please subscribe, share with a few friends that will find value in it. And if you still want to learn on how we actually take trades, the trades that we take, the pairs that we trade, we have a full course that's linked in the description below. You don't want to miss that out. Check it out and have yourselves a great weekend. Peace.